Hello guys, welcome to another video in the Forex beginner series. So on this lesson we're going to be talking about market analysis, or how do we analyze the Forex market. So to begin, let's look at the three ways to on how we analyze and develop ideas to trade the market. There are three basic types of market analysis. The first one is technical analysis, the second one is fundamental analysis, and the third one is sentimental analysis. You can say sentiment or sentimental analysis. So, for you to analyze the market or to know the next market direction, you have to balance these three ways of analyzing the market. You have to come up with a balanced idea, or all of them has to rhyme in the same direction. Your technical analysis, your fundamental, and your sentimental, all of them could help you know the next market direction. Some people use one. You could use one, but to be on the safe side, at least you could use only two. Most of the time I use two. I don't use sentimental, I just use two, and I'm good with that. So I'll be taking them one after the other. Now the first one is technical analysis. So technical analysis is the framework in which traders study price movement. So technical analysis is simply price action. Price action is how the market behaves, or the reaction of markets at any region, using past history to tell the future market direction. So the theory is that a person can look at historical price movements and determine the current trading conditions and potential price movement. So we use the saying that history repeats itself. So when you're trying to analyze technical analysis, you're using the previous data, what the market has done, to tell what the market is going to do in the future. All right, let's say the market was trading down, you could say, okay, the market is going to keep on trading down, something like that. And looking at the chart, you use basically the chart to do the technical analysis. All right, so the evidence of using technical analysis is that theoretically all correct market information is reflected in price. So everything you see in the chart is basically what the market is doing. So if price reflects all the information that is out there, then price action is all one we really need to make a trade. Yeah, we need price action. You need to understand price action of what the market is doing or what the market is telling you. And once you're good, I would say technical analysis covers 70% of your market analysis. 70%. The remaining fundamental and sentimental could just take 30%. But for me, technical analysis beats everything. All right, if you could analyze the market technically, you can tell what the market is going to do. You're good to go. So this is how the forex chart looks like. So you're going to analyze what we call candlesticks. I'm going to be talking about candlesticks later on. So we use candlestick to analyze the market. So with what has been going on here, this is the past price. You can use that to tell what could happen. The market move with patterns. The market move with patterns, something like this. The market could be giving lower low, lower high, and like that. So we're going to use this information to tell the next market direction. Like this, now you can see the market stopped trading down and now it's trading higher. So by technical analysis, you could say, okay, the market is going to be trading higher high, higher low for the next 2 to 3 days or 1 to 3 weeks, and like that. So that's how we use that information in terms of technical analysis. So technical analysis is basically analyzing the chart, analyzing the market using price action. And then the next one is fundamental analysis. So fundamental analysis is a way of looking at the market by analyzing economic, social, and political data, or political forces that affect the supply and demand of an asset. So fundamental analysis is like looking at the news, knowing what the uh, market calendar is saying. For example, I have my, oh sorry, it's not loading. I've shown you the forex calendar where we use that to know those information about the fundamental analysis. So it's going to help in your analysis. Let's say if we have a news by 3 p.m., even if you analyze the market with technical analysis, because of that news, you might not take a trade, or you might want to wait after the news you take a trade. So you can see, even if you analyze, like I said, 70% of technical analysis, you need to add fundamental analysis to know when the market is going to move, what are the major drivers for the day, is there any bank holiday. So both the economic, social, if you have an event, a political event or an election, all the stuff, those are the things that will affect the price of a currency. All right. So if you think about it, this makes a whole lot of sense, right? Just like in economics 101 class, it's supply and demand that determines the price. So you could say, okay, because of the Russia war is going to affect, Russia is now using their own currency to transport goods. That might increase the value of Russian currency. You could buy Russian currency, stuff like that. So that's basically using economic events. Things are happening around the world. Let's say inflation rates is rising or decreasing. You're gonna show you how to use all those information to tell what the market's direction could be for each currency. So economic events like major, now take note of this, the news, major news that affects the markets every month. It's NFP. NFP is non-farm payroll for US dollar. It happens first Friday of every month. Please take note of that. The next one follows is core CPI. I think we're going to be having that one this week. Core CPI is another big economic event. And then FOMC meeting, where they will give some data or give some talk. After that event, we see dynamic price action in the market. So you need to be aware. At least these are the three major economic events we experience every month. Those are going to affect your own analysis. So after doing your technical analysis, you need to look out for the economic data and what the market it's gonna be doing due to those economic events. Some people do not even do a technical analysis because of the economic data. Some people, they understand economics and understand those information very well, so they could use the outcome of those news. They could use that to tell the next market direction. All right. But most of us are not really that good in technical in economics, so I would say technical analysis is very good, because even if the event comes up, if you read technical analysis very well, you see that it's the same thing that supports the idea for that market to do what it wants to do. Once we go into the chart, I'm going to be showing you all those things. But like I said, focus on technical analysis and then you add it up with fundamental analysis. So it's just like if economy is good, high currency value. If economy is bad, market could drop. That's just basically using fundamental analysis to know what the currencies are going to be doing. You could read more about that. I think the PDF is down there in the link in the description. So the next one is sentimental analysis. All right. So sentimental analysis, it's almost related to fundamental analysis too. You could analyze the markets maybe through your feelings. You have to be perspicacious to be able to say, okay, I feel that US is going to be going in this direction. US oil is going to be having some issues. All those things, you're just analyzing the market with sentiment. So earlier, we said that the price should theoretically accurately reflects all available market information. Unfortunately, for us traders, it isn't that simple. The markets do not simply reflect all the information out there, because traders will just act the same way. Of course, that isn't how things work. So, traders would actually do react to how they feel about the market. All right, so that's what it means here. Some traders would say, I think the market is going to do this. Some traders will say, I think the market is going to do this. So that's why I said uh, technical analysis and fundamental analysis, it's good for you. So we don't really put much interest in sentiment. But sentimental analysis too could be as a result of your own experience about the economy, about the market, about the world, and you can use that to tell maybe what the markets are going to be doing. So which one is the best? Which kind of analysis is the best? So this is kind of like $1 million question. I've said it. Technical analysis and fundamental analysis with the backup of fundamental analysis. That's all you need to trade the markets professionally. So you'll be good. Once you can analyze the markets with technical analysis and use the fundamental analysis to look out for what the economic data are saying, and I think that's good for you. Okay, so that's that for the analysis or how we analyze the market. So like I said, technical analysis and fundamental analysis, you're good to go. So in the next lesson, we're going to be talking about types of charts, the kind of charts we use to analyze the market, and I'm going to be teaching you about candlestick and how they form and how we can use that to tell the price movement. Hope you find this one insightful. I'll see you on the next lesson.